We're talking today with Manhattan Corporation, ASX code MHC. The company is a gold explorer with its flagship gold project located in northwestern New South Wales, about 200 k's from Broken Hill. We have with us Kell Nielsen, who is both the Chief Executive Officer and Chief Geologist. Now, Kell, you've been really active over the last 6 months with numerous drilling programs. Can you give us an overview of what's happening out there?
So what we've been up to, Tim, is last year we went in fairly heavily on the known gold areas with some RC, and part of that we need to follow up and get some drilling into the 20 to 40 kilometres of strike in the northern section where we hadn't done any work and there's been very little drilling to date. So part of the process was we're trying to work towards a resource inventory up there in the north, and so we needed to understand some of the controls of the high-grade mineralisation that we had previously drilled at New Bendigo, which included 30 metres at 4 grams per tonne and 7 metres at 18, as well as get to know some of the older mining centres through the areas such as Phoenix, Clone, Pioneer, and what specifically controls that high grade. So that's what we've been up to, and as well as stepping out of that envelope and testing some new areas as well.
And how encouraging have those results been?
So the results at New Bendigo, we're still waiting on the results up from the Phoenix and Pioneer area, but the results from New Bendigo have been really good to us. So we felt that from the RC and a bit of diamond drilling work that wasn't so successful last year with the diamond in terms of getting good quality core, we knew there were some cross-cutting structures that controlled the mineralisation within our lower grade 600 metres of mineralisation that we've identified today. And that we felt that we needed to lift that grade and bring it up, because that's what the old guys were chasing. They weren't chasing the 1.5 gram material, they were chasing the higher grade, the +5 gram tough stuff. So we went in, we did some close-spaced air core to try and figure out the orientation of that high grade, and that's come back positive to us, and now we're going back into a fairly extensive RC, really focused on that high grade material.
And what sort of depth have you drilled at, and what sort of depth are you planning to drill at?
So most of the New Bendigo main zone mineralisation that we're looking at today is less than 50 to 100 metres in depth. So the stuff that we're looking at, the high grade, is near surface. I think the 30 metres at 4 grams is from 11 metres down. It's near, it's close, it's a lot of it's in an oxide environment, and we really see that as where our resource is starting to emerge. We just want to lift up that grade and bring it through, and that will create volume and ounces.
Kell, can you give us an update on Clone, Hot Soils and South Pioneer, where you're looking to access that land package via the National Parks and Wildlife Services? Can you tell us how those negotiations are going?
The 3 prospects that we have to the north, which is Hot Soils, Clone and Pioneer, and we actually see Clone as an identical component to the New Bendigo main zone, so that's why we're very keen to get into that. That land occurs on a pastoral lease block, which is ultimately owned by National Park Service in New South Wales. We've been negotiating an access agreement with them for at least the past 6 months. That has progressed to a stage where we've completed our review of environmental factors, and that's nearly in front of the Minister for signing. So we actually anticipate that we may have that access completed shortly. And hopefully that RC program, when we go and do New Bendigo, we'll be able to go and start drilling Clone and others as well.
Now, Kell, junior explorers always have to balance the cost of drilling with their balance sheet and cash holdings. How are you positioned in regards to cash at the moment?
Yeah, we're sitting pretty good, Tim. Obviously, we did a recent raise, which has reset our cash position. And we don't burn through cash heavily. We don't run heavy administration systems, which kills that cash flow. And most of our exploration has been reasonably cheap to date. So the RC that we're planning is more than fully funded, and we don't see a need to raise in the foreseeable future.
Kell, obviously COVID is all the talk here in Sydney now. They've extended the lockdown. You are operating in New South Wales, albeit you're 200 k's north of Broken Hill, close to the borders up there. Can you talk to us about how COVID is potentially impacting how you operate?
I guess like every other company that's operating in New South Wales or has resources in New South Wales, we're monitoring that situation and trying to work out what can and cannot be done. Obviously, being very distant to Sydney, we're not affected by the lockdowns and other things that we have within the Sydney environment. And we're also lucky that South Australia currently runs a bubble with the back end of New South Wales within 100 kilometres of the border, which allows us to get people in and out into South Australia, etc., and everything else. It's a little bit harder with Western Australia, but we can see a way through to getting the RC started and progressing, if not maybe just a little bit delayed, would be the way we're looking at it.
And Kell, what should shareholders and potential new investors look out for in the coming months?
What we can expect from Manhattan in the next few months is we've been leading up to a point where we need to go RC drilling and to focus on the high-grade material. So we see lots of news coming through. We also, within the next couple of weeks, should start seeing some assays come through from the Phoenix and Pioneer area, where we're actually quite happy with the alteration systems that we enjoyed up through those areas. And hopefully that relates to some gold mineralisation reflected in the assays.
Thanks for your time, Kell.
Thanks, Tim.